Lourenco, very good afternoon to you. Thanks for joining us.
My pleasure to be here.
Let's dive into the bounce today and then the recovery the stocks had in recent weeks. So I wanted to start on a macro issue that's affected iron ore prices. So to what extent has the Vale disaster impacted your business and likely to continue to impact the prices of iron ore that you're seeing?
Yeah, the impact is indirect for us, Cleveland-Cliffs, because we are dedicated to the American market. And Vale doesn't sell here in the United States. That's our market. We are geographically protected. On the other hand, the shortages that are coming, both in sinter feed fines and pellets, promoted by the catastrophe in Brazil, will definitely have a huge impact on prices due to the short of supply.
I mean, hasn't it had already? The price of iron ore has climbed, right, to multi-year highs. Your stock is up almost 80% in the last 12 months. How much more is there to go?
Remember, Sarah, that this week China is out of business with the Chinese New Year. They will be back in full force on Monday, Chinese time, or Sunday evening here. And I'm expecting big jumps in both the underlying commodity price and pellet premiums starting on Monday. So it's still to come.
And if we take the Vale issue out of it, you still think there's a lot of momentum behind this anyway. Is that something that can be offset by the trade war escalating, or is it separate from that?
There's a lot of momentum here since tax reform. Tax reform has been the most important thing for us back in 2017 and with great repercussions in 2018 as well. And we're going to carry us into 2019. Manufacturing is back in the United States. And we are pretty much the sole supplier of iron ore pellets for the American steel industry. So we are having a great 3 years in a row, and thanks to tax reform. Has been the most important thing for us.
Last time I talked to you, it was because of that earnings call where you went after the Goldman Sachs analyst pretty hard. Apparently you guys made up afterward.
Not really.
Oh, no?
But let me correct this once and for all. I didn't go after the Goldman Sachs analysts. I was going after the ones that short the stock for short-term profits.
The embarrassment to his parents?
These were them, not him.
Oh,
well,
with him, I was just calling him to ask a question.
You called him out a few times.
Yeah, just because I would like him to ask a question, but that was it. But, Goldman Sachs is my go-to bank. I work with them all the time. I was interviewed by the head of research and the head of commodities during the Goldman conference. We made up with the bank. We're in good shape.
Yeah, I mean, didn't you have a little clash with Jeff Curry as well on the forecast for iron ore? I think you were right because his price forecast was too low.
I made it clear that he was wrong, I was right. That has been the history of our lives. I have been right, he has been wrong.
Nonetheless, on the last earnings call, clearly you said we're going to screw these guys so badly. I don't believe they'll be able to just resign. They'll also have to commit suicide. You're talking about the short sellers there.
Exactly right. And they could have done that today. They didn't, so I'm in good shape.
Sure, but you're saying you were going to squeeze them.
I already did.
Right, by buying back stock. And yes, there was a lot of the float that was out short, and your PE was at 5 times, and therefore clear arguments to buy back the stock. Nonetheless, how much have you done of that to generate the share price improvement versus actually the earnings improvement? And is this something, if you do see a big macro turn down, that you might regret because you'll be short of capital to meet your debt covenants?
Well, I just regret that the research profession went down to the way they are right now. They act like bots, miss, bit. Reuters does that in 30 seconds after we release our press release.
But investors are educated and they know that, and consensus has earnings. I mean, I talk about this topic often with Jamie Dimon. We know what the estimates are, and we've got to mark you against something. We're not just going to listen to the CEO say, buy forevermore, I'm brilliant long term.
Well, it's more regarding retail. I think that the small guys, they still follow what these folks write. And we have situations. Today I used one in the call. Take a company like Lululemon. More or less the same level of revenues, more or less the same level of EBITDA. They trade at 23 times EBITDA. We trade at 6, 7. So there's a lot of potential.
People are more jazzed about athleisure than they are about iron ore.
Yeah, there you go. Yeah, but we are a lot more strategic. a lot more important in the long run. We have been around 172 years. I will tell you, 100 more years, Cleveland Cliffs will be here, and we're going to be using other brands of yoga pants.
Well,
Thanks for coming back on.
My pleasure. Thanks for having me.
Did you hear from a lot of shareholders after that?
Oh, they're very happy.
They're
They're
well,
a bunch of
happy
happy people.